The following podcast was recorded on Tuesday, March 23rd, 2021, featuring Jim Bianco of Bianco Research and Ben Breitholtz of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome to the latest edition of Talking Data. Our Talking Data series seeks to offer timely insights into macro themes, along with macro data and its impact on the economy and markets. I'm your host, Kristen Radish of Arbor Research and Trading, and I'm joined today by Jim Bianco of Bianco Research and Ben Breitholtz of Arbor Data Science. Welcome, Jim and Ben. We're going to get started with you today, Jim. We're talking about the role of central banks. Has MMT won the debate?
I think for the time being, it has won the debate. Let's look through some of the things that's happened in the last couple of months. The Democrats proposed a $1.9 trillion stimulus bill. The Wall Street parlor game was, well, how much are they actually going to get? And everybody thought it'd be 1.1 trillion. Turned out they got every single penny of what they were looking for, $1.9 trillion. Not only that, but you're not hearing any of the debate about it's giving an incentive for disk work, it's going to cause problems. No one seems to be discussing that. And now we're adding into the debate, literally today as we speak, a $3 trillion stimulus package. Our infrastructure spending package that's coming down the pike, and that will probably be $3 trillion. Don't expect to go anywhere lower. And we're also potentially talking about more stimulus afterwards. So we have come a tremendously far way. Back in February of 2018, right as Jay Powell became Federal Reserve Chairman, he was asked about this newfangled thing called MMT. And his argument was, any talk that the deficit doesn't matter was just plain wrong. Boy, have we come miles and miles from that, including Jay Powell's thinking. This is not a criticism of Jay Powell. I'm just saying how much the MMT debate has moved in the last 3 years has been incredible. And yeah, it seems to have won the order of the day.
Yeah, I would agree. The big thing for me is the understanding that we weren't and haven't been at full employment. That's been a problem for central banks, specifically the Federal Reserve, for years in terms of tightening too soon, not allowing that labor slack to erode. And now we saw some pushback from Kaplan. I think is getting kind of made fun of quite a bit here regarding that concept that we could already be or really close to full employment, but I think the fact that Powell and the majority of the of the committee, Brainerd and so on, understand that there's a decent degree of labor slack, there's inequality that needs to be kind of eroded away. The idea that we can allow things to run hot and not really be so overly concerned with this inflation overshoot that we can press forward with this fiscal stimulus, and kind of really passing the baton. Draghi tried to do this and was somewhat had some success, but Powell's had a lot more success now in seeing the fiscal side, Congress finally get off their butts and get some money to the directly to the people. Now the question is, what's gonna is inflation going to show up and ruin that party? Doesn't seem like it, but maybe it will. I think the next steps, infrastructure spending, great. We'll see what happens there on the $3 trillion side. Deficits and M2, that's kind of still a punching bag and getting made fun of as a producer of inflation. But I think the next steps are going to be relating to that full employment. So I'm curious to see what Congress, even the Fed, suggests. If you look at Kelton and really the MMT crowd, there is, if we do have labor slack, I think we will be looking not necessarily at UBI, but more at how do we get people employed? Can we have government-sponsored or pushed, directed, employment? And that's kind of, I think, the next phase of this MMT. And they'd really win the debate if we kind of start going in that direction.
Yeah, I just want to add one thing real quick here to finish off the MMT debate. For those that are not familiar with MMT, it's not spend money like drunken sailors. There is a belief within the MMT community that there is a level at which you can spend that would create inflation. their argument is that's way off in the future and that we've got a lot more capacity in order to spend before we get to that level. Well, we'll find out where that level is, because I think that in the MMT debate, as it continues to win, there will be more stimulus, and we'll eventually hit that level. But it's not spend infinity forever. It's spend till you get to that level of inflation. And right now, the central banks, led by Powell and Janet Yellen, although she's not the central bank now, but close enough, are basically saying we're not at that level of inflation and we don't have to worry about it.
What if they get it wrong?
Right. Love me jumping on that. Oh, go ahead.
Oh, go ahead, Ben.
Yeah, I was going to say, so, what if they get it wrong? Again, yeah, inflation is going to be the, kind of the throttle for stimulus. And, one thing I've been watching really closely is what is consumers' propensity to spend, specifically in the lower to middle class, that are going to spend those stimulus checks. And, as an anecdote, I was out at Home Depot and Lowe's and Menards over the weekend, and I've never seen so many people buying big ticket items. So that money is seemingly getting spent. And if you look at search activity, from the consumer level, it's pretty amazing how much the propensity to save and seeking money market accounts or savings accounts, and that we saw this huge amount of search activity in April, May, June, July, highest on record. That's eroded and fallen. Now we're actually seeing a decrease, on a year-over-year basis, which to me indicates that there's spending that is happening. And this is kind of now what Jim's always talked about, the big test. We'll know, I think, shortly, not necessarily the next couple of months, but into year end, the impact of this massive stimulus. If you look at the raw actual spending data, there's some neat data offered by Factious that tracks this on a year-over-year level, thanks to base effects, but thanks to also improvements. We're seeing incredible swings higher in interest in everything from cruises to ride sharing to consumer services, even sport betting, I think, is up over 1,000% now with March Madness here. So this money is getting into the economy. It's possible it's getting into the economy now faster than what we had seen back in April, May of 2020, and then with the December checks that were given in January. I'm curious to see. I think we're going to have a faster reaction function and maybe a faster response from inflation, no matter, I'm not sure what it'll be, but I think it's going to be faster this time around.
If I was to add my anecdote too, for those of you watching, I'm not at my usual background. I'm in Southern California. I finally went on vacation. And the TSA data says that the airlines or the airports are 75% of what their pre-pandemic capacity was. That sounds about what I saw at O'Hare and at LAX, is that they're running at around 75%. My plane was about 80% full. So things are definitely start coming back to life. And to what Ben said, I agree that 2021 is the story is inflation. Either we get it, and that's a big story, or we don't get it, and everything that we understand about fiscal and monetary policy changes, because back to our first bullet point, MMT has won the debate, and the whole orientation about what fiscal policy should do, what monetary policy should do, changes in a way that we haven't seen since Milton Friedman in the last 50 years. So it all really comes down to, do we get inflation or we don't? Now, I've been long on record saying I think we do, but I'm also trying to be open-minded at the same time, saying that's my best guess. But if it doesn't happen, I'm not going to dig in and say it's going to keep coming. I'll say that there will be another stimulus package and another stimulus package, and we'll find out what the limits are of MMT. But if we have not hit those limits now, I think 2021 will go down as a seminal year for economists and economic thinking in terms of modern monetary theory and what it means and how the economy should function relative to monetary and fiscal policy.
Yeah, and there's proof in the pudding too. So one thing we've been doing lately is pulling in all speeches from all major central banks, everybody from Australia to Zambia. And what we've noticed is discussions of inflation, wages, price pressures hit the lowest on record across the global community in late 2020, starting to rebound a bit. But you can compare this now, though, to the discussion about full employment and jobs, and that's actually risen to the highest on record. So We've seen this quite this shift. And I think if for some reason central banks aren't too concerned about the idea of running hot in terms of boosting valuations, asset prices. Another little tidbit is their discussion of financial stability, their so-called third mandate, has dropped from about 6% of all communications shortly after the pandemic hit in March and April to a paltry 2.5% of all kind of high frequency discussions. So we've seen this total teardown in concerns about what could happen to credit markets, what could happen to volatility across the markets, and so on. So their reaction function to markets might not be as great. I know Jim always corrects me because every time there is some kind of setback, like a 10, 15% drawdown in the stock market, they do react. But it seems like, for right now, it seems like a reaction function would be less. But, if they do get it wrong, that would mean that they're not likely going to blink or hike soon enough. And so we saw some cracks in that a little bit recently with 7 of 18 on the committee deciding that they expect rates to be higher in 2022. Now that's not ubiquitous, of course, and Powell does lead that committee. But if we're at a point, if you look historically at global rebounds all the way back to 1960, we're within a month or two from now, based on the trajectory of the economies, this is where we typically get hikes, and this is where we start to see tightening policy, and this is when we start to combat inflation. And that just doesn't seem like that's going to happen this time. So really, there's no great playbook to look at for this exact scenario. And we get asked all the time, what would you do with inflation expectations, risk assets, and so on? Well, you really can't build a model on this because there's no history to really go off of. So we're kind of at a new juncture with MFT, the fiscal spending, and so on. And it's just going to have to be a wait and see. I think that's how the Fed is approaching it. Very results based. But now we have the market that's like, no, we're looking at our own projections and things could run hotter than you think. And that's where this battle's going on.
Yeah, one last, two things. When you look at the MMT debate, I think the market is not where the central banks are. There's a bigger worry about inflation in the markets than there is where the central banks are. We'll find out. We know there's a base effect coming. We know the numbers are go up. What if we get it wrong in a big way? And that is, we do see significant inflation over the next year to 2 years. I think they really accelerate the movement towards cryptocurrencies. One of the ideas behind decentralized finance or DeFi in cryptocurrencies is it's a permissionless system. It allows for no central bank or larger authority to take charge and tell everybody what they're supposed to do or how it's supposed to work. It's supposed to be, here's the rules, everybody follow the rules as well too. So they really open the door towards cryptos, I think, and especially DeFi or decentralized finance. Should we wind up with a policy error that looks like they've gone too far with the stimulus and inflation? Now, that has to happen first, but there is that pushback that I think is already brewing out there. Because if you ask anybody in that space, why do you think that we're going to have DeFi in the future? Money printing is like either first or second is one of the reasons why we have to move away from the current centralized finance system as well too. So they've got this competition that's hanging out there, just waiting for them to slip on them being the central banks, slip on the banana peel and actually create inflation for the first time in 20 years.
Well, thank you both for your thoughts today, and thank you for joining us all the way from California today, Jim. We appreciate it. Have a great time. Thank you to our audience for joining us. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. For any questions, please contact Gus Handler at gus.handler@arborresearch.com.